So let's start by looking at a small business tax preparation checklist. This checklist helps us keep track of some important dates, lets us know of what information to keep track of throughout the year and what to gather so that when we sit down to file our taxes, we'll have most of it, if not all of it, ready to go. First of all, we want to find out when taxes are due, and that can vary based upon how the business is set up. Commonly, we know that S corporations and partnerships are due March 15th. Similarly, sole proprietorships, single member LLCs, and C corporations are due April 15th, along when individual tax returns are due. And then if we file an extension, there's two other deadlines to keep in mind. If we have filed an extension before one of these due dates, if we are an S corporation, then our taxes are due no later than September 15th. If we filed an extension and we happen to be a C corporation, then we have until October 15th in order to file our taxes. So those are some important dates to know about when the taxes themselves are actually due. The second step in tax preparation is a reminder for us to get all the tax forms that we need. If we're having someone else prepare the taxes, that's great. There are advantages to doing so. But knowing which tax forms to use is helpful, and taking a look at those tax forms as you're gathering the information to give to your tax preparer can also help you make sure that you're dotting the I's and crossing the T's. Sole proprietors use 1040s and Schedule Cs. So with all tax reporting, there is a summary page that shows the categories of income and expenses. And then there are supporting schedules depending upon the type of business. A sole proprietor uses a 1040 to report and Schedule Cs to have additional detail. S corporations use Form 1120-S, and partnerships must complete their Form 1065s, then provide individual partner information on Schedule K1s. I'm going to check the chat box. Wonderful. There's Lori. We always have someone who is an expert in the farm industry, and we so appreciate that, who can add detail to our conversation. So thanks again, Lori, as always. Farms use Schedule F. That's easy to remember. Not always the case with the IRS. Thank you. The third thing we need to do is to collect our business records that are related to income throughout the year. The IRS wants to know how much income that our businesses have brought in. And while the backup detail is not necessarily sent along with the tax return, we want to make sure that we're able to explain what we are referring to as income, as well as the various sources of income through documentation. Continuing with that tip, collect your business records relating to income. There are some suggestions to take this one a little further to help us have best business practice. One is that we keep records of gross receipts from sales, all sales, whether it be product, service. Also know the goods that we have received back in the form of returns or any refunds that we may have made throughout the year, as those two things and details also affect our sales figure. We also want to remember any interest or investment income from any financial accounts that happen to be in the business name. If they're in our individual name, that is something we'll report on our individual taxes. But if we have savings and or investment accounts of any kind that are set up in the business name using the business employer ID number, we want to make sure that we're keeping track of that interest and or investment income and showing that as income on our statement, financial statements and our taxes. Keeping an eye on the chat box there, jump in, of course, as always. In addition to gathering the information on our income, the tax returns also ask for documentation on our business expenses. And here are some tips, and I have more to add, so please take note. Many expenses can be documented by statements, such as utilities, detailed credit card statements, auto payments from checking. These are things that we can keep and we can refer to, and it's easier, it's efficient. I advise the folks that I work with to do as many auto payments as possible. This way, you're not late, and you also have a record of all transactions. Now, depending upon cash flow, that may or may not work for you. But in our business, we do the smaller items like utilities on a regular basis right out of the business checking account. Again, we're never late. And then we have a transaction history that's easy to report for our expenses. More documentation is needed if we are going to put in for a home office deduction, or if we're going to record expenses related to transportation, meals, entertainment, business health insurance expenses. These are things we want to keep even more detailed records. So more than just what we paid, but who did we pay it to? When did we pay it? With notation of why. So if I'm going to a professional development conference that involves travel, I'm going to keep those receipts, and I'm going to show the dates that I traveled, where I went, what conference that I attended, so that I can explain those expenses if necessary, and so that I can remember at the end of the year. And we also want to always ask if we're taking advantage of available tax breaks. You'll be reminded throughout today's session, we encourage folks to talk with a tax professional and or read a tax expert's writing at least once, if not twice, throughout the year, just to keep track of any available tax breaks, because these are always changing for small businesses. Consider having an account actually to be dedicated for automatic expenses coming in and out, as well as, speaking back to income, if you have a high volume of sales that is paid for via credit card, you might consider having a designated account that accepts those credit card payments to help keep track of the individual sales transactions, and then make periodic transfers into your business checking. Again, check in with a tax professional at least once, if not 2 times per year, to see what opportunities there might be that you could take advantage of. The 5th step on this first checklist tells us to send out any required information returns and make sure that we've received in the ones that we need. What do we mean by that? If we have employees, we need to provide employees a W-2 by the end of January. That helps the employee prepare their individual taxes, and it also helps us make sure that we have met the deadline of January 31st for doing so. Also, by the end of January, if we have contractors that we have paid $600 or more to for either doing work with or for us, or for providing a service to us, for instance, a financial planner or an accountant or janitorial service, we need to provide those contractors the total sum that we've paid them on Form 1099. If it's less than $600, we don't have to do the Form 1099, but if it's equal or greater to $600, we do. The other thing that we want to make sure that we have received in are things like interest paid on loans, any rent that we've paid on property that we may lease, fees or services that are provided by outside professionals to us through our business, because we want to make sure from the income side and the expense side that we have the official numbers coming from the source that we were doing business with to incur those expenses and or earn that income. All right, number 6 is get an extension if you need one. Nearly every business at some point in the life of being a business, we file an extension at least once. It's fine, it's not to worry. In fact, it's better to file an extension than it is to be late or bump right up against a deadline. That can be very stressful, and that's when most of our mistakes are made or omissions are made that could cause us big problems down the road. So we can file an extension. We do so by using Form 7004, and we just need to remember to do that before the original date of the return. So not on March 15th or April 15th, but before those due dates, we can file an extension. A thing to remember about the extension is that we're filing the extension to delay the due date for filing the return itself. We are not, unfortunately, able to delay paying the taxes that are due. So although we may delay and get an extension on filing the taxes, we do need to make sure that we are sending in estimated tax payments due by the due dates. Extensions typically are for 6 months, and they run through either October or September, depending upon how the business is set up. We looked at that a moment ago. And do be reminded that the state rules for income tax extensions can differ from federal rules. So if you're extending for your federal return, chances are you'll want to also extend for your state return. Those rules might be different. Those dates might be different. And the forms used certainly are different. So be sure to check into the state requirements and compare those to the federal requirements. Again, it's better to file an extension and not need it than it is to miss a deadline. We'll get through number 7 here, and then we'll talk about who can do our taxes, and then we'll do a review on this first very meaty checklist. Number 7 is make the changes for the coming year to reflect what you learned in doing your taxes this year. What are some keys to that? Pay attention to the estimated tax payment that we're paying. Is that amount sufficient? That may need to be changed year to year based upon our income, based upon the amount of taxes that we're due and or penalties. So each year, take a look at how much in taxes you paid and how was that number compared to previous years. Were there any penalties for late payments, or were there any penalties for underpayments? These are some clues that let us know that we probably want to look at that estimated tax amount payment, and we may want to increase or decrease that to avoid those problems in the coming year. Overpaying on our taxes could create a cash flow problem that necessitates the need to borrow money. And of course, when we borrow money, even if it's in the form of a line of credit, and certainly if it's a credit card, that's going to cost us interest and fees. So we want to try our best to get the estimated tax payment amount where it should be, certainly that it's not too far of an overpayment. And then certainly we want to get it right, because we don't want to underpay. Underpaying in our estimated taxes can catch up with us at the end of the tax in terms of interest on taxes due but not paid. And there can be penalties for taxes not being paid at the due date as well. So these are some clues regarding tax payments to pay special attention to after the tax returns are prepared to help prepare for next year and how we may handle those tax payments.
for helpful places.
Thank you for watching our video. If you would like to speak with a business advisor at no cost to you, please feel free to reach out. We're the Small Business Development Center at Blue Mountain Community College. Please attend one of our workshops, either virtually or in person, or just give us a call. Thank you.